Hey guys, Mike here. So I got another jam-packed video for you today, and obviously more red in the market, so definitely you can put Santa's face on the milk cartons, that gentleman said, because we have definitely crossed levels and stuff, and I'm going to show you, especially on the cues, what we need to be looking at, because there's some a fundamental and a psychological level coming up that could absolutely open the floodgates. And I want you to keep things in perspective really quick before we get into this, which understand what time we're in. We're in a time where volume's lower, right? It's holiday time. And so, like I said before this whole thing kicked off, it's easier to push it in one direction or the other, right? That's why a lot of times there are Christmas rallies, because it don't take much to push it up if volume's low, right? And a lot of the bears have gone on vacation. In this case, the bears are not on vacation. The bulls are definitely on vacation. But also understand what's happening here. Why do you think all of a sudden this sell-off's happening and you're starting to see major mega cap stocks being sold off hardcore all of a sudden, right? And it's simple. The narrative hasn't changed. The Fed is still tightening, and they don't have that many more rounds, I don't think, left to move up to 5.1 or anything. But what does the market like to do? The narrative is there will be earnings apocalypse come first quarter, right? And so what does the market do? They like to get ahead of it, to sell it down really fast. We've already seen this multiple times this year, hadn't we? We didn't get to see it really in first quarter, second quarter, but all of a sudden they thought the world was going to come to an end, third quarter, fourth quarter, we'd be in a recession. So what they do, they would put on these major sell-offs before, and then all of a sudden, where was the bar? It was already set so low that when those stocks came in like right at the bar or just tripping over it, they're like, oh, this ain't as bad as we thought. And then you would see these run-ups, right? And so we're going to get to see if that's what's happening, but that's definitely what's happening now with the sell-off. That's just the way it is. I mean, because Tesla hadn't reported earnings, right? And yet you're seeing, for those who want to know what capitulation looks like, look at a Tesla chart over the last 7 days. Is this the bottom? Who knows? But that's what people talk about. They want to see this in the market, where you just see this massive amount of liquidation taking place. Like, and understand Tesla, the reason why it's a big deal is because Tesla is a large cap stock, right? It's rare you see that on a large cap, except in bear markets, versus the small and mid caps. They've already been taken out to the woodshed, right? They were taken out in 2021. And so, it's not a surprise. You can move those stocks like that, but to see a large cap go down like that, and this is what people are waiting for with Apple and Microsoft. You see it on those, it's like, oh boy, because they hold such big weights, right? That's what people are waiting to see. That's usually that final push to where your real strong bulls just say, okay, we give up, let it sell down, and big money just piles onto it. And we're gonna get into that stuff, but I want to kind of keep things in perspective of what's happening. It ain't the first time we've been through that this year, and so this sell-off could definitely continue to happen because January and February did not have a good history when it comes to bear markets. But looking at something, I just want to tell you, this to me is the biggest risk right here to the market. By the way, I'm going to show you this, and this is what I'm expecting to happen. The earnings apocalypse might happen, but this right here is what probably my biggest concern is, and it's the credit markets with rising rates and all this stuff, the tightening of liquidity, basically trying to be drying up here in a way, even though there's still a lot out there. But this right here, and you can see strains are showing in credit markets. The pile of troubled debt in the U.S. has more than quadrupled in the past year. And I mean, that's 2022 where the arrow starts, and you can see it's going up, right? And so, and when you look, I want you to pay attention to this one closely. This is a chart that shows that companies are more leveraged than ever before, but that's not what I'm really paying attention to. You can see there's no doubt we're more leveraged. Look at 07 though. Look at 06, 07, how it was increasing. Same way you see with 2020, 2021, 2022. Shockingly, what happened in 08 and 09? Boy, that dropped a lot, didn't it? And it contracted a whole lot, didn't it? Now, why is that? Well, what happened in 08 and 09? A lot of companies went under and defaulted on their debt. That's what happens, right, in a major downturn. That's what I think people are waiting for here to see if it's going to happen. It usually does, especially in a tightening cycle this fast. The X factor is all the liquidity out there, right? Because a lot of companies took out a lot of debt for basically free out in 2020, 2021. So they're sitting pretty right now, but when they got to go refinance or go back, if things get really bad in the economy in China and America, to survive this whole thing and go back and get more debt at the rates they're at now, whoo boy. That's when things are going to get really interesting, let me tell you. And that's when fortunes are made, usually from the rich folks, so they know how to navigate and make money off all of these companies falling to the wayside by picking them up for pennies and all this other stuff. But the other thing, here's another threat, is going to be the housing market. I showed you this stuff they're pulling with these loans going to be coming out with these pilot programs, predatory lending, but what's happening? Still falling. U.S. pending home sales dropped by 4% in November, above expectations of 1%. And you can see, I mean, here's U.S. existing home sales down 35%. Looks like a meme stock chart, right? Falling off a cliff. And that's my question, like, who's buying houses in this market right now? I don't really know, but it ain't me. And then here's another one. The tight employment market. What do you see? Nearly 4 in 10 previously laid off tech workers found jobs less than a month after they began searching. And this is from ZipRecruiter. And you can see right here, job search duration for workers hired after a layoff to termination. And it ain't hard for them to go out and find a job. Less than a month. You see that? 1 to 3 months. And so it is not hard. Again, the labor market seems to be tight. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And I had a long discussion with my father-in-law and his family. They own businesses and stuff, and they still say the same thing. They ain't never seen nothing like it. And my father-in-law is in his 70s. As far as this shortage of workers, whether it be for agricultural, service, whatever, they just can't find it. I asked him, I was like, how do you fix it? Because it's never happened in my lifetime. I don't know how you fix this. As a matter of fact, you can tell the government has no clue how to fix it. You know, you just don't know. I mean, you have to have people come from somewhere, right, to start taking these jobs. And until that happens, I mean, how do you get the unemployment rate up? How do you get demand down, right? And so it's just a conundrum we've never been in. Like, again, I don't know how you. It's definitely not a problem you can't snap your fingers at and go, it's nothing a tax cut is going to help. It's nothing putting more money into this is going to help. You need people, bodies, adults, right, to go and take these jobs. And so I don't know. Let me know in the comments what you think about that. And you're talking to people, but everybody I talk to says ain't never seen nothing like it. Not a job shortage like this. And so, and I've explained to you guys, this is your first video you're watching, I've already explained where people went. Now we know what happened. I don't know how you fix that, but understand if you're into tech, risky assets, all that good stuff, anything traded on the NASDAQ, you know, watch the QQQ, man, because it is, look how close it is to breaking the October lows. And when that is broken, from, you know, a technical standpoint, from a psychological standpoint, you could definitely see the floodgates open, and that RSI still has room to go on the daily if it needs to, and it can definitely go even farther oversold than that. And then, but you see the S&P, what's happening on the SPY here, it's got, that's the S&P, it has farther to go, right, before you try to break that low instead of new low. And so, again, we'll see bounces here and there, and nothing goes straight down. But yes, everybody's expecting these levels to start being broken. If they are broken, absolutely. It's going to be, you might get your capitulation moment, who knows. But on the other hand, this is one of my favorite memes right here. You know, Netflix was first from the Grim Reaper, Meta, Google, then Amazon. Now Tesla's happening right now, and it's knocking on the door of Apple. It's exactly what's happening. And with Tesla, and I put this in there for the members this morning, look at this, but I don't know what it is about South Korea, but they love them some Tesla. And so they've been scooping it up this year on this pullback, $2.8 billion worth of stock. And in this latest pullback, it's like, I don't know, maybe 400 million if I remember reading this correctly. And so they absolutely love them some Tesla. And I think you got to ask yourself, you know, it was obviously 3.3% up, I think, end of the day. I believe it was up 5.5 this morning. But you got to ask yourself why, right? Did the narrative change? No, a lot of downgrades came out there as far as them lowering their price target and stuff like that. Nothing, I mean, Elon Musk didn't say anything I'm aware of, so nothing really changed. But why would it pop right out of the gates like almost 6% up, right? And it's very simple. One, it's had a brutal sell-off, 7 days. Also, think about if you're short in this stock, and I showed you how much, I mean, in the billions they're making. Guess what happens? And cover your shorts, you got to buy back that stock. And so, to me, this is called short covering. You got to take it back, take some profits, because you're a moron if you don't, basically. Yeah, it could continue to go down, sure, but why not take some off the table, right? Plus, you got 7 brutal days, and I mean brutal days, of selling off like that. And when you, like I said, when you see that for a large cap stock, it's just something to kind of stand back and take a look at, because it doesn't always happen. It's not easy to move large cap stocks like it is the small and mid caps, right? And we've seen that. But once they get on top of them and start pounding them down, I just saw the Grim Reaper meme right there, they can do it. And it's usually at earnings that it really puts them down like that, but it wasn't even that for Tesla yet. So we'll see what happens when they report fourth quarter earnings. They've been doing everything they can to get the numbers up, and they usually report good earnings. So, you know, we'll see what happens there. If they report bad earnings, I think we all know what time it is. And there's definitely, I mean, the amount of options coming through, especially on the put side for Tesla. And a lot of people, it's skewed because you don't know whether they're buying or selling, but a lot is selling. You can tell a lot of people are trying to get in this stock by selling the hundreds and 90s and 80s because the premiums are through the roof. So even if it don't trigger, they're making a boatload of money just selling those puts right now, right? And so, and it was so oversold. Wouldn't it do for a bounce, right? I mean, come on. I'll show you the RSI, my lord. So yeah, and plus, I was looking at one today. I meant to put this in here for you guys, but it's how far it's below its 200-day moving average, I believe. I think it's the farthest it's ever been, and so it is way below it. So yeah, we got a bounce today. We'll see what happens tomorrow. See what they want to take the stock. But the other one's Apple. I mean, Apple. You see, people. There it is. That support level right there. We talked about it before. We reached it, and we finally reached it and breached it. And you can see right there. And once it went below it, so let's get back above it. And then the bulls tried to hold on for dear life, and then it broke that down below it. But it needs to get back above that support level for sure, because that's a big one. Because the bulls don't get back in control of Apple, and they just keep pushing this down, and Apple goes down to like 115, 110, 100, right? Yeah, you'll get your new bottom, or you'll break the previous bottom, the SP, easily. And then head down, because that's another psychological thing. When people see the big boys, the Microsoft and Apples get taken out to the woodshed, the whole market sells off. You see what's happening with Tesla, right? Tesla starts going down like crazy. A lot of other risky stocks start selling off as well with them, and people start kind of panicking, right? They're like, oh my God, because what happens is you start to see your green, where you're like, oh, I'm green. I've been holding for over a year, and I'm starting to see this thing go down, and we start seeing capitulation type moments. You're like, well, I want to keep the green I got, right? So that's when they kind of sell out, right? And so that's when you get that. And I was going to tell you guys, because, I mean, some of you guys email me and ask me this all the time, but I put these morning news briefs out, which is why nobody's surprised. These come out pre-market, and everything's in here from the news to important indicators, looking at bottoms, tops, to end up option levels, going in and out of all these options. We track max pain. We track what levels these major puts are setting at and calls are setting at as well. Because I like to use that and stuff. And, I put this out Monday through Friday. So if you're looking at it, all you got to do, if you're looking at this video, just hit the join button. It literally is a whopping 99 cents a month. I mean, I don't make money off this, so it's just something I put out there to you. I shouldn't say that. I mean, literally after taxes, and for those who think about starting a YouTube channel and doing this, YouTube is going to cut 35% right off the top. So you do that, your business taxes, yeah, you don't make any money through this. But a lot of you guys keep asking about that, and that's the only thing that goes to YouTube is that. So if you want to sign up for it, hit it, whopping 99 cents a month. I don't know what you can even buy for 99 cents at this point in time. And my accountant laughed when I told her that was something I was thinking about doing last year, and she's like, okay. And she wrote down the math. Like, here's what you're going to make on each member. I was like, ooh, 22 cents. Woohoo! But anyway, if you like it, I like to put it out there. But that was the whole point of starting this channel anyway, was to keep people informed, to educate people. And I keep adding stuff to it. So if you got any ideas, let me know in the comments and stuff like that. If you don't want to do the Patreon and do the Discord and all that stuff. So just putting that out there to you. So tomorrow is Thursday. Obviously, we'll open Thursday, Friday, and then we have New Year's Day. And then I believe we're closed on Monday. So really, I mean, good news is 2 days left. And some people are really happy to see those 2 days done with, right? Because you're like, oh, thank God we're going to end this year and start over in 2023. And so, we'll see how we start the new year out. I will tell you, I mean, historically, bear markets, I've already done members for the video. And I go back to each chart, by the way. I show them each individual chart. I'm not making this up. A lot of channels, somebody was telling me, they present these seasonality charts and crap, but it's not detailed in every single year. So I show them every single bear market, January, February, going, I think, back to 1969. And I'm looking at the extended bear markets, right? Because people say, well, 2018, that was like a good Christmas rally and good January. I'm like, yeah, because the bottom was December 24th, so of course it was great. If you hit a bottom, yeah, of course things rocket, right? But just trying to compare apples to apples, this is an extended bear market, right? You don't get a whole lot of them in the history of this country, or history of the stock market, that's over a year. You just don't. I've looked at the charts enough to know. You just don't. Right, and I can almost name them off the top of my head. I've looked at them so many freaking times. I don't go back to pre-69. I don't really care that far back. The only reason I go back to 69, 70, all that stuff, we had inflation problems. That's the only reason I go back. Normally, I wouldn't even go back for 2000. But when you're looking at extended bear markets, if you look at 2004, we only had 2. This is the third one. All the rest of them have been 30 to 90 days or something, right? And so that's the reason why I'm going back for you. But anyway, we'll see if it bucks the trend in January, February, all of a sudden great or whatever. But with, you know, this earning apocalypse people keep calling for, I don't know how they let it do that. And so we'll see. I think basically we're going to end up breaking down those lows. We'll see if they break it down before. And then we're probably going to end up in a range for a while. But anyway, let me know what you think down in the comments, and I'll see you guys tomorrow.